please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, from the broader markets, it's given up a little bit of its enthusiasm from the day's high, so it has come off a little bit, but there are a lot of stocks which are gaining. So mid-cap pharmaceuticals is doing well. Natco Pharma is up 3.6%, Merck is up around 3.6%, not that much in terms of volumes, but nonetheless, and even something like an Alchem, not that much in terms of volumes, but that stock is up around 3-odd%. On the downside, watch out for Max Financial because that stock actually gained quite significantly in yesterday's trade, but it seems as though the market is not convinced. So today there is profit booking which is taking place on that particular counter. But let's get in Ashwani to talk about the technicals of the market then. We have Ashwani with us. Ashwani, over to you then. What are you recommending with the Nifty just about consolidating with a negative bias and stocks?
See, we are really anchored to the rupee, and because rupee has appreciated a bit, hence the markets are looking higher. Now, if the rupee can get to say 72.20, etc., I think this sort of short covering will gain in momentum. As you can see that rupee sensitives are coming off and financials are moving up. My sense is that financials could do better today. So even now you could get long on Bank Nifty. Also what we are noticing in last 15 odd minutes that stocks like HDFC Bank are now beginning to recover. So if HDFC and Kotak are able to participate a bit, you will get upside on Bank Nifty. For the day with a stop say around 11,400, 420 on the Cash Nifty, it's possible to buy into financials. And depending on which way the rupee goes, I think the market is due for a rally, but we need some parameter to show a significant change. And on the other hand, if we get back to rupee of 72, 70, etc., then possibly all bets are off. Having said that, Hindalco is a buy with a stop of 235, target of 251. Natco Pharma is a buy with a stop of 830, target of 856. And HPCL is a buy with a stop of 245, target of 262.
Ashwani, so you said we are due for a rally. In terms of levels above which you think one can take that view and maybe take a trade as well? What would that be on the Nifty?
See, the level is 27,270 on the Bank Nifty and about 11,400, 450 on the Nifty Futures and 11,400 on the Nifty Cash. Now, because we are anchored to the rupee, I think that needs to soften up a little bit before you have that sort of rally. But the market is evenly poised, and we need to move for the move after the next move on the rupee. It looks like rupee is planning to spend some time in the 71.50, 72.50 type of zone.
Ashwani, just one quick point on the market before we get to questions about viewers. The Nifty is down under 3% from its life high. The Bank Nifty has lost 4% or so. These are smaller moves as compared to what we've seen in the currency. So while yes, 300 points gone on the Nifty in a very short time span and due for a bounce, all that is fine. But is it it's not as if we've lost too much for a meaningful bounce in that sense. And then you throw in the flow data, etc. When we put out the mutual fund numbers, there also the tap seems to be closing pretty fast. So could this just stay sideways without actually offering a bounce and then eventually break down again?
See, that's always a possibility, but given all the factors you enumerated, chances are a lot of it is in the price. EMs have been damaged, battered, bruised, and you are now trading closer to support. Any sort of good news, any recovery, any government action, if it comes about, the shorts are likely to get cleaned. The issue is that they are not able to significantly break down for the last 2 or 3 sessions, and hence the odds of a bounce have improved.
Okay. Let's get in a couple of Twitter queries then for you, Ashwani. We have Richard, who has 500 shares of ITC, which is bought at 276.5. Wants to know what to do, hold or sell.
Well, I don't think much is going to happen to ITC, and he should hold on with the stop, say about 270, and look for targets of 340, 350.
Okay. All right, Ashwani, we're going to let you go on that note. Thanks very much for joining in and taking us through all of those queries and strategies. Well, let's get in some opinion then. Lata Venkatesh spoke to former RBI Governor Raghuram Rajan, and he says developed economies are not decoupled from emerging economies, adds that growth is in emerging markets, and if tariff wars slow down, these nations then will also see some amount of stability. Let's get in that opinion.
The reality is much of world growth now is driven by the emerging markets. So the industrial world cannot be decoupled from growth in the emerging markets. We need both to grow if the industrial countries are to do well. We have an illusion, a temporary illusion, that the industrial countries are growing and growing strongly, and it doesn't depend on the growth in emerging markets. That's an illusion that will crack if, in fact, the emerging markets slow considerably. I think the Argentinian and Turkish case are special. They have had a history of problems, and this has come to the fore recently. It does signify some concern for other emerging markets. This is not a good time to abandon macro stability. You have to focus on reassuring markets that you are good for it. And unfortunately, countries that have growing current account deficits, that have large fiscal deficits, look particularly vulnerable at these times.
Got the market, which isn't really running away, but it's actually selling off a little bit. So from the promise of being in the green, actually building on the gains, we're down about 22 odd points on the Nifty. And this can't be too good. We are actually at the day's lowest point. 11,414 is the day low. We're at about 11,417. And actually, we should put that out as an alert that we are pretty much almost at the day's lows at this point in time. Okay, I think we've got our colleague from CNBC Awaz, Lakshman, who's joining in. Lakshman, morning. You're picking up some information as far as government's plans with regards to a company, Dredging Corporation, is concerned. Go on.
हाँ, जो मुझे सोर्सेस से जानकारी मिली है उसके मुताबिक ड्रेजिंग कॉर्पोरेशन ऑफ इंडिया लिमिटेड को सरकार जल्दी अपनी पूरी हिस्सेदारी बेच देगी। अभी इसमें गवर्नमेंट का जो स्टेक है 73.47% है। इसमें जो हिस्सेदारी बेची जाएगी उसमें एक नई बात यह है, इसमें पोर्ट सेक्टर की 3 कंपनियां मिलकर सरकार की हिस्सेदारी खरीदेगी। ये 3 कंपनियां हैं विशाखापट्टनम पोर्ट ट्रस्ट, पैराद्वीप पोर्ट ट्रस्ट और न्यू मैंगलोर पोर्ट ट्रस्ट। ये तीनों कंपनियां मिलकर खरीदेंगी और इसमें विशाखापट्टनम पोर्ट ट्रस्ट को सबसे ज्यादा हिस्सेदारी लेनी है और ये लीड कंसोर्शियम में लीड की भूमिका निभाएगी, लीड पोर्ट कंपनी के तौर पर। और खास बात यह कि तीनों कंपनियां ब्लॉक डील के जरिए डीजीसीआई में सरकारी हिस्सेदारी खरीदेगी। इसको लेकर शिपिंग मिनिस्ट्री ने प्रपोजल दिया था। शिपिंग मिनिस्ट्री के प्रपोजल को इंटर मिनिस्ट्रियल ग्रुप ने अप्रूव कर दिया है और जल्द ही इसको कैबिनेट से फाइनल मंजूरी मिलने की संभावना है। और इसमें जो प्रपोजल के पीछे जो लॉजिक दिया गया है वो ये है कि डीजीसीआई चूंकि पोर्ट सेक्टर से जुड़ी हुई कंपनी है, तो पोर्ट सेक्टर की कंपनी खरीदेगी तो डीजीसीआई से बेहतर तालमेल हो सकेगा और आने वाले दिनों में नए पोर्ट डेवलप करने हैं, नए टर्मिनल बनाने हैं, नए नेशनल वाटरवेज बनाने हैं। इन सब में ड्रेजिंग का बहुत ज्यादा कारोबार होगा और इससे क्या होगा कि ड्रेजिंग कॉर्पोरेशन ऑफ इंडिया को बहुत बड़ा कारोबार मिलेगा और पोर्ट सेक्टर की कंपनियों के पास जो भी सरप्लस फंड है वो इस कंपनी में निवेश कर सकेंगी। यही मकसद है कि सरकार पोर्ट की 3 कंपनियों को सरकारी हिस्सेदारी पूरी लेने की इजाजत देने वाली है।
Okay, all right, Lakshman. Thank you very much for bringing us that update. So you can see that Dredging Corp is up around 9% reacting to that piece of news. So sustaining in terms of gains that we're seeing. But we did speak to Nucleus Software earlier in the morning where they did mention, what exactly might be the incremental impact of the rupee depreciation on their business. And in fact, that is the theme which is playing out in IT stocks. IT stocks are gaining on the back of what they could benefit from in terms of the weaker currency or the weaker rupee. A report by Bank of America Merrill Lynch estimates that companies could keep the first 10% of that rupee depreciation benefit. Reema is here to revisit the story and give us more details on this. Reema, go ahead.
Hi, thanks so much for that. Let me start with Infosys because that is clearly a big mover where UBS says that the currency gains could create an opportunity for the company to accelerate their investments. So they're expecting a faster constant currency growth in FY20. They've upped the EPS estimates by 4 to 7% on the back of the rupee depreciation and kept the target price at 850. By Merrill Lynch on the IT sector, they say it's quite likely to assume that the IT companies will be able to retain the currency depreciation benefits, or at least the first 10% of the currency depreciation benefits, because small moves in the currency do not spark off renegotiation talks with the vendors. And secondly, also because IT companies had to bear the brunt of the rupee appreciation in the prior year. Macquarie says the maximum positive impact will be on TCS, Tech Mahindra and Persistent, though they have upgraded Wipro as well as Hexaware on the back of valuations. So Wipro target price is at 350. For Hexaware, it's a target price of 560. And in that Infi TCS argument, they believe that Infosys should trade at a 20% discount to TCS. We'd also spoken to Tech Mahindra to get a sense of the impact of the rupee depreciation. They say that they do also believe that the first 5-10% of the rupee depreciation benefit could be retained by the industry, at least going by the historical instances. On the margins and net profit, they believe the rupee depreciation will improve their profit. A 1% rupee depreciation benefits their margins by 15 to 20 basis points. But at the net profit level, they do not see any impact. And that's because the hedging gains will be less compared to what they had in the prior year, because the company has hedged about 75% of its net cash inflow at a level of 71.5. So net at the bottom line EPS level, they do not see any kind of a benefit, which could be the reason why Tech Mahindra as a stock is under pressure. Though they also added that the telecom sector is seeing improved, is seeing the recovery momentum intact. They've signed close to about $300 million of deals in the telecom vertical in the current quarter. Listen in to the management.
We have hedged most of our, about 75% of our next exposure for the next 12 months is hedged already. And I think it's hedged at around 71.5 or so on an average to the dollar. So what we will see is that last year we had a large amount of hedge gains, which will not be there this year and the next 12 months. But effectively the EBITDA will go up. So at a net level, I think there won't be much of an impact. If I look at the communications vertical, I think the momentum continues. I think at the end of Q2 we had said that at the end of Q1 when we were doing the results, we had said in Q2 we had won 200 million of TCV already, and that has gone up to 300 million TCV. So incrementally more positive on the communication side. So that momentum continues. I would expect that Q2 total deal wins will be much higher than Q1.
Okay, that is essentially a focus on technology, but look at the market go. I mean, we're down 30 points now. So it's not large by itself, but what is, in a way, what stands out is a reversal. So the general view has been that, well, we should see a rebound. We've lost 300 points quickly, and then a bounce is due, etc., but there's no sign of it, at least not right now.
Get in some fundamental opinion then. We have Mehraboon Irani of Ginny Gem Consultants who joins in now to discuss what his view on the markets is. Mehraboon, hi, thank you very much for taking the time out. Well, there are some beneficiaries in the market with the rupee depreciation. All is not lost for pharma and IT companies especially. So within that basket of sectors, which ones would you be bullish on?
Well, I honestly have not liked pharma sector for at least the last 3-4 years, especially Indian pharma companies. And whenever I've been asked to comment or recommend something, I mentioned only 2 stocks, both MNCs. One is Abbott and one is Merck. But coming back to the Indian pharma companies, do they stand to gain from this? Answer is yes. Is there a trading opportunity? And my answer always was yes. But somewhere fundamentally the story called pharma is something which is not impressing me or making me possibly advise my clients to buy Indian pharma from a longer term. So while there could be some more steam as far as the trade goes on the long side, I honestly am not too enthused, and I don't think the dollar strength or the rupee weakness is reason enough for somebody to take a call from the longer term as far as Indian pharma company goes. So I still stick to Abbott and Merck. As far as Indian IT goes, I think I feel that most of the positives for the time being could have been played out. If somebody believes in investment, and when I say investment is from a longer term angle, more than a year angle, I would say that a stock like a Wipro at 320, 325 and maybe an SCL Technologies provides a good investment opportunity. Other stocks which I have liked, which I have recommended in the past, like First Source, Take Solutions, all have had the run up. I still like them. Frontlines, I still like a TCS. But somewhere something tells me that maybe next 3-6 months later, it's possible, especially the frontline IT stocks, which have run up a little bit because of the rupee weakness also contributing to it. I think there may not be too much to make money as far as Indian IT frontline stocks go. I'm including them also, at least in the shorter term. But as far as story goes between pharma and IT, fundamentally, I definitely prefer IT by a distance as compared to Indian pharma.
Merabun, hi, morning. Anything specific with Wipro, or just the fact that it's fallen quite a bit? I mean, it is the worst of the lot in terms of performance.
I would say yes. You said it. That's definitely a contributor. But somewhere I personally feel the stock has become absolutely under-owned. Not many have spoken about it. And somewhere you feel that there is a signal that things could possibly change and things may start getting discounted in the price. This is definitely not a call from the next 1 to 3 quarters angle, but for a call from a little longer term angle, because at this price, I don't think there is any possible room for a further maybe 5-10% downside. I don't see that, Prashant.
Okay. Merabun, what's your thought on Axis Bank and the management change?
I would say it continues to remain a very high beta stock in the banking pack, and management change definitely has been welcomed by the market initially, and then the fizz virtually got lost in the second half of the session yesterday. I think this is definitely positive from the longer term angle for Axis Bank. It will soothe a lot of nerves, but as a stock in a market in which I feel the whole lot of negatives which we keep discussing on, whether it's bond yields, whether it's US dollar right now, whether it's oil price, whether it's US-China trade war, I personally believe this is yet to play itself out in the overall valuations in the market. So Axis Bank, considering it's a high beta stock, at the moment, honestly, I would not be encouraged, I would not advise my investors or even short-term traders to possibly buy into it, because I still believe there is too much of noise in the market. State elections are yet to create some more noise. And the animal called the bull is somewhere getting scared right now. So I don't think the overall market is going to go up in a hurry, and Axis Bank being a high beta stock, at this moment, I would not be enthused to recommend it or advise my investors.
Merabun, so what are your thoughts broadly on participation in the market, etc.? We saw the mutual fund numbers. Paints a pretty poor picture in that sense, right? I mean, under 6,000 crores came in. We don't have the SIP breakup, that also would have gone down. Is that going to create some trouble? Because it's not as if foreigners have been big buyers, right? And it's not expected that they're going to suddenly turn around and start to buy big time. If the flow here also starts to taper a little bit, and I'm not even talking about it turning minus or big redemptions or anything, at least not yet. But what are the chances that that also starts?
It's strictly possible, at least in the near term. I think the market is right now seeing for the next 3-6 months, and the events in front of the market are not very positive. There are concerns, the concerns are for real. And therefore, I said somewhere these concerns will get discounted, will play itself out, and it could be maybe 11,000 or 11,100 on the Nifty, who knows, that is possible. But is this the top of a bull market that we have seen? My answer is a clear-cut no. I believe that the animal called the bull is right now feeling a little bit low. There is too much of noise. He's feeling scared, and we could see the markets coming down. Don't forget, a bull market means economic expansion, and the economic expansion to play itself out is a period of 5-10 years. It's not something which would have started in 2014. It's not going to end pretty soon. So I would say this negatives with the market is seen, the noise which is there, the noise which could continue with the state elections, and then what is going to happen next year could play itself out, and we could see a market right now where one should be selling on any advance and possibly waiting for a real low price to buy into the market. But I personally believe that the bull will come with more ferocity a little later when these events play themselves out, because there are some positives on the horizon which I think the market will take its own time to possibly realize. Like, for example, the tax collections is one. Second is the corporate performance is another. Now, these two positives, along with the credit offtake picking up, the investment demand is picking up. Now, all these are clear-cut signs that we are still in a bull market. And let's understand one thing, a bull market which lasts for 5 to 10 years has got distinct periods of correction in terms of time, in terms of value, and the interim period, the weaker bulls exit, the weaker bulls only see the negative factors, and the stronger bulls come in.
Sure.
So this is the period which we are going through, where even the portfolios could start bleeding in the interim period. But at the end of it all, I still believe an opportune time will come for the market to ultimately pick up and attract buyers in the market. And that period could be maybe 2-3 months ago. And the two big triggers which I see, one is if we have a clear-cut signal that politically, I think India will have a same government coming next year, that is India specific. And second is somewhere I feel the US Fed. If there is an indication coming, which I personally believe, and that's my perception over the next 2-3 months, that US growth is ultimately going to slow down, and we are not going to see as many rate hikes as what we expect at the moment coming in 2019. I think that will be a clear-cut trigger for the dollar to reverse, and definitely a biggest positive for markets like India.
So the market, I mean, the stock market isn't really pointing to any reversal or bounce or anything of that sort. We're at the day's low, 33 points lower. A. Prasanna is chief economist, ISEC primary dealers. He's joining us right now on the phone line to talk about the rupee and the bond markets. Prasanna, thanks very much. Good morning. Appreciate your time. Do you believe that the pause in terms of this one-way move is going to last, or it's going to pick up on the higher side once again? The dollar rupee, that is.
Good morning. We do all know that the RBI is the single biggest factor in the forex market, right? So obviously, what we have seen over the last 1.5 months is that the RBI slowed down its pace of intervention, and that's why we have seen this kind of move. And if you look at the numbers also from April to July, they were quite active, and then it seems to slow down. Now, again, of course, from yesterday onwards, it looks like they've stepped up the pace of intervention. So our sense is that having allowed such a large move in a short span of time, it does appear that the RBI would kind of draw a line in sand at this point of time, at least for the short term, till, of course, we get the further developments from global markets.
Okay. Hi, Prasanna. Thanks very much for joining in. This is Ekta. Do you think that the kind of depreciation and the extent and the rapid depreciation that we've seen actually warrants the RBI to probably step in terms of, say, more measures such as, say, preponing a possible rate hike?
Well, I mean, I'm really not sure what hiking rates before the policy would actually achieve. I mean, if you're asking about the interest rate difference of the currency, if that's what you are implying, I mean, we saw in 2013 that didn't really work, right? I mean, of course, it is one of the things to be considered when your interest rates are not properly aligned. If you look at, I think, our structure of rates now, yes, maybe policy rates have to go up, but if the rest of the curve, if you look at whether it's the G-SEC market, the corporate bonds, actually, I think rates have reacted quite well to changing circumstances in terms of oil prices, fiscal outlook, inflation, and rupee. So I'm just making a contrast from 2013. I don't think interest rates at least are misaligned. So therefore, I don't see any urgency. Having said that, yes, of course, we do expect RBI or the MPC to hike rates when the October meeting comes around.